Business owners, in this video, I'm going to be showing you the 3 key financial indicators that you need to be looking at every single month in your business. These 3 key indicators will allow you to grow your business more profitably, but more importantly, if you do not look at these on a monthly basis, your business will literally be leaking profit that you should be putting into your pocket. So as we dive in here, I did want to share, I was taught this specific model from one of my business coaches, which he had actually exited a company for over $1 billion and another company for over $100 million. These were the 3 key financial metrics that he taught me to look at on a monthly basis in the companies that I own, manage, and oversee. So let's go ahead and dive in. So when we're looking at, I put this lucid chart together. This is essentially the flow of how the revenues in a business happen. So for some of this, essentially as you are jumping on here, you're going to see the actual revenue comes into a business, and then these are the stages all the way to like the actual net profit of a company. So if we start here at the revenue, every company has revenue come in. And then what are those 3 keys that we're looking at? So number 1 is our gross profit. Number 2 is our company's SG&A expenses. And number 3 is our company's net profit. So when we're looking at this here on revenues for the company, as that money comes in, the gross profit percentage that we want to look at is, are we achieving a minimum of at least 30% gross profit or more? And stay tuned for later in the video. I'm going to go to a sample QuickBooks account and show you where to find this information, but we're going to go through this to start. So number 1, is our company achieving at least 30% gross profit or more? Number 2, is our company spending 20% of our expenses in our sales and general administration expenses for the business or less? And number 3, are we achieving at least a minimum 10% net profit or more? For those that are listening, your business model may be completely different from a lot of different models, but this is, primarily the case with a lot of like service-based businesses. This is where this, comes together. Question could be asked, well, Cody, I want to achieve higher than a 10% net profit. You have to look at this as essentially the likeness of if you're trying to get fit and get in shape, right? Like, yes, of course, you want 6-pack abs, or in this case, maybe a 20% net profit, but how do you get there? We need to start by creating a baseline. So if we, the example on the fitness side as well, we probably need to start tracking what we're eating every day. We probably need to start tracking our body fat percentage. We probably need to start tracking how many cardio sessions do we do a week and how many workouts, weight workouts are we doing on a weekly basis. Like that, we got to get some baselines. And so what we're talking about here is we need to establish baselines for your business of where you're at now. So then we can measure, and then what we measure can then be managed and improved, which is what we're talking about. So as you look at these, you could say, I want more, I want better. Of course, we all want more and better, but we need to know where we're starting from to then improve. So let's go through this exercise together. So you're looking at your company's QuickBooks and you're achieving at least 30% gross profit or more. Thumbs up, amazing. Move on to the next stage, which is here, right? So our gross profit, you can download a copy of this in the description below and get access to this so you can kind of play around with the numbers for your business. Your gross profit percentage actual here, if you're over 30%, then you move on. If you are not over 30%, you need to stop. You do not pass go. Do not collect $200. Like, you got to stay here and fix this first. And so the question you could ask yourself is, okay, if my business is not achieving at least 30% gross profit or more, what do you do? Well, there's a few things you could do. 1, you can raise the prices of the service or the product that you sell to your customers. That will increase, the revenue, which can help increase your gross profit for your company. Number 2, you can lower your cost of goods sold. Like, let's say, for example, like I have this mouse here. There's a certain cost that every component in this mouse costs to make. And so that is what encompasses essentially like my cost of goods sold. If you have a service-based business, let's say I have a residential cleaning company, which I do, the cost of goods is essentially I sell a customer to, clean their house for whatever the price is. And my cleaner goes to the house, they clean the house, they use cleaning supplies, they Obviously, I'm paying them an hourly wage to clean the house. Those are costs that are encompassing my cost of goods sold. With that, it's, well, what can I do to control my cost of goods sold in my particular company? Well, it's the labor of the people that fulfill the service that you're selling, the physical products or goods or things that are actually encompassed in the deliverable of the thing that you sold. And then otherwise, it's raising the price. So those are a couple levers. There's more things you could do, but for the sake of this video, those are a couple ideas of what levers you can pull to start increasing your gross profit. So moving on, if we have 30% plus gross profit, we go to the next, which is achieving 20% or less in our SG&A expenses. And I provided a couple examples here. This isn't all encompassing, but it's just giving you an idea. You could literally go and Google what are all included in SG&A expenses in a company. But here's some examples. So that is the cost to do your marketing. Say you're doing Facebook ads, Google ads, you're doing, you're creating content and you're spending money on that. You have salespeople, you pay a base plus commissions. You have an office that you pay rent and utilities for. You have, an admin, assistant on your team. You have other salaries related to just, operating the business, maybe a bookkeeper, like all of those types of expenses kind of lump into your SG&A expenses for your business. And so the next number is we want to see 20% or less of the company's expenses to be in the SG&A column. So the question is, well, Cody, what if my expenses are higher than 20%? Well, what you do is you need to go and troubleshoot. And what are some of the things that you can go and troubleshoot from this? Well, you can troubleshoot your marketing. Are you profitably acquiring customers in your business? And so the question for you is, well, how profitably is profitably? Like, you should know what it costs you to acquire a customer for your company, because that will help you understand, is your market efficient or is it inefficient? Okay, well, let's say your marketing is dialed in and you're crushing it and you're getting amazing return on ad spend. Let's go to your sales. How is your sales team doing? Does your sales team close 5% of your leads? Do they close 30%, 35%? Like, that's one of the other things you could troubleshoot. Are my salespeople actually closing the leads that I'm giving them, and at the rate that you want to see them? So that's just another lever. Are we overpaying for office rent? Do we have too many operational team members that we're just overspending on our operations team, right? That may be something else you look at. Are we overpaying for finance team members, maybe in our back office? Again, this isn't all encompassing of every single thing and your SG&A expenses, but I'm just trying to get you to think about what these numbers mean and what story the numbers are telling you in your business when you're looking at them. And so if you are at 20% or less in your SG&A, then you move on to the final number, which is your net profit, which we have a rule of thumb. We need at least 10% net profit in any business as our baseline. And you could say again, Cody, I want 15% or 20% or 30% profit. Every business model will be a little bit different, but you should be able to, at a minimum, get to a 10% net profit in your business or higher. You ask me, Cody, how do I now improve it and go above 10% if I'm not there? Well, you go back to the beginning, of the journey. You go and address your cost of goods and your SG&A. You go and figure out, how do we make our marketing more efficient? How do we sell more of the leads that we already have? Our cost of goods. Are we able to change the way that we pay our team? Are we able to increase our prices, which would then increase, potentially net profit if your cost of goods remain the same, right? Like, you just go and start pulling these different levers. But the three things that I look at every single month in our company after the month is closed is, for that month, how did it look for our total revenue that came in? And then the three things from that is really, okay, what was our gross profit percentage for the month? Off of that, what did we spend on a percentage basis in our SG&A? And then what was our net profit? And by looking at each of these things, I can go and diagnose, and it'll tell me a story, which I'm not a financial guru by any means. I'm not going to pretend to be. I'm basically telling you how I look at our company's financial performance on a monthly basis and what I need to go attack with my team to be able to increase our net profit by addressing some of these other areas. And that's exactly what you can do as well. So where do you find this on QuickBooks? So I just pulled a sample, just QuickBooks account on here. So let's take a quick look at it. So one of the things that I did do on here is I did add a customization, which I basically just put on here. I want to be able to look at my QuickBooks on a percentage of income because, again, we're talking about 30% gross profit, 20% SG&A, 10% net profit. That's why I'm setting this up this way, because I want to look at the percentage of income. So that was the only thing I changed, just so you know, if you're looking at your books, how to look at it. Let's go ahead. So I just, again, this is just a sample. The data honestly on here kind of sucks, but it'll still work for the exercise. So again, you're looking at your company's books. You had just, seen the last month had ended, and now you're looking at the performance from last month. So let's do our exercise like we just talked about. So first things first, I want to see my gross profit right here. Did I achieve minimum 30% or more? Again, this is a sample, just books with just random data in here. So it's not going to be really great for the story, but it is really great to see like, where are you looking? So I can give a thumbs up. My gross profit percentage was over 30%. Amazing. Let's move on. Your cost of goods, just another relevant item. This on this particular sample, it was right here on a percentage basis. And then we could scroll down. Essentially, all of the SG&A expenses for this particular sample company is encompassed into right here, which they have 68%, which is really high and does not work, for our model. So within that, I would then know, okay, well, if I'm obviously way over 20%, then I need to start diving into everything in here and seeing, okay, what is my marketing cost? How am I acquiring customers? How's my sales conversions? Am I overstaffed? Like all of those things that we just talked about, like that will tell me the story. I don't need to like look at line by line on a P&L for the month and wonder what's good and what's not. I could just create my baseline, which is that 30%, the 20%, and the 10%, and then go and find out the story and the information in each area and how I can improve. And then obviously here, net percentage, net profit here was 43% negative. So obviously that does not hit our 10% threshold. But obviously we already knew it probably wasn't, because they're freaking 48% over what we would like to see, this number be at. So again, if your company is not using QuickBooks Online, probably similar ways you could look at this. All of our companies run off QuickBooks Online. So this is just how I look at the data every single month. And then go meet with our teams and identify what areas of the business that we need to go make changes in or make improvements in so that we can be achieving these baseline numbers. And then obviously the goal is, once you have these baselines established, then it is to continuously go to work on improving and increasing your bottom line net profit, if that's your goal, right? So that is essentially, in a nutshell, the three things that you need to be looking at every single month to prevent yourself and your company from leaking out profit, and to make sure that the business is operating as efficiently as possible from a profitability standpoint. And by the way, if you got value from this and you're a business owner that you're trying to scale your business and grow it into a multi-million-dollar enterprise that is highly profitable, and you can create a self-managing company that allows you to have the time and financial freedom that you're really looking for, what I would recommend you do is check out the link in the description below and learn a little bit more about the Scale with Pros community that I have built that essentially helps business owners just like yourself grow to multi-million-dollar enterprises that are high profit, helps you create a self-managing company where you are not the one that has to do every single thing in your business anymore. So with that being said, thanks for watching, and we'll see you in the next video.